VA, USDA, FHA. Does this make any sense to you at all? I know if you're a first-time home buyer, you may be completely confused. So stay tuned. We're going to give you all the details. Government-backed loans.
Oh, boy.
We do a lot of them down here.
We do. It's almost every deal.
First-time home buyers love them.
Yeah.
Repeat home buyers love them.
Mm-hmm.
So let's talk a little bit about, I know we want to go into all of them.
Okay.
We can't really just dive in and spend 20 minutes on each one. We could.
We could.
We're not going to do that.
No, because I think at some point people are going to be like, click.
Yeah, we're done with you. You're so boring. And so my son is kind of interning this year and helping out. And I know we sat down and one of the things that came up, he was sitting in with us, is, do you understand anything we're talking about?
He glazed over like deer in the headlights.
What in the world are you doing? So he did, we have to dummy it down. So we have to explain every little abbreviation, all of that. And so we're going to try and do that a little bit here.
Yes. And again, this is not meant to assume anyone's an idiot by us dumbing it down. These are so complex. I've been doing it 19 years. You've been doing it...
Yeah, almost 20.
Almost 20. So for us, it's second nature. But again, my daughter is getting close to considering buying a house. And when I talk to her about this, she's glazing over. So let's deglaze.
So first of all, let me explain age. My son's not 30 and trying to buy a house. My son's 21.
Yeah.
I have one older, one younger. But he and all his friends, right?
Yeah.
Some of his friends are out working and they're going to be buying a house in a couple years. A lot of the others are in college. They've got another year and a half.
Yeah.
Some of the overachievers probably got 4 or 5 years. I know a couple of them. But they're going to want to buy a house eventually. And we need to make sure they understand.
Right.
Because I've talked to all of them, and they don't have a clue what I talk about and what I do.
And so my kids, thanks to recent birthdays, are 26 and 28. So they're not, and they live with us in the house. They've heard me talk. They still don't get it just by mom using acronyms. Your daughter even helps
you a little bit every now and then.
For a hot second.
Hot second.
For a hot second, yeah.
So let's talk about, I mean, first of all, probably one of the most popular here, VA. I know we've talked about it before, and there's an abbreviation.
It is.
Veterans Association.
Yes.
Okay, so.
And that's not part of Veterans United.
Ooh, good call.
Yeah.
I didn't want to go there, but you did.
I did.
So
I took that left turn out for Corky.
So a lot of people, let's just do that now. Nothing against them. We're not.
It's the best marketing.
It is a great marketing tool.
But they're not part of the Veterans Association.
How many people do you call you and go, no, I called the VA and I'm pre-approved? The VA.
Yes. And I go,
it's Veterans United.
Almost every call. And I go, awesome. So they're the same as my local lender, but my local lender doesn't work banker hours.
Did you ask them where they talked to someone, where they were? Like what state?
Oh, I was just like, okay, let's.
Yeah.
So you can do a VA loan. You do okay. I was going to say, you work the same as them. No, you work 10,000 times better. I can text you at 9:00 at night. You're going to answer me. You talk to me directly. You don't put my buyer in the middle. Right. But we can go down that rabbit hole.
And I'm sure people have had wonderful experiences.
Yes.
Right? All we're saying is that is a great marketing tool.
Yes.
And does exactly what it's meant to do.
Get the phone to ring.
But VA, 100% financing.
Yes.
Right? That's a huge selling point.
Majority of the time, and I'm not going to say all the time because if you put on the uniform, you were either Coast Guard, Marines, Navy, Army, Air Force, or Space Force, the new one, you qualify for using the VA loan. Sometimes
years of service.
The Air National Guard, call Darren. He can run it and tell you.
Yes, so that was a good question. How do you know if you qualify? How do you know if you have VA eligibility, right? Well, one, they can call VA themselves, pull their certificate, or ask them. Mm-hmm. It goes based on your year of service, whether or not you were in a war conflict, or anything like that.
If you were honorably discharged or dishonorably.
Right. So you can always call us.
Yes.
We can pull it, get the dates. Here's your DD 214 and figure out if you qualify. Reserves.
Yeah.
Number of years of reserves. You may qualify as well.
Yes.
So there's
And
there's lots of people that qualify to use the loan.
And a widow from active duty may qualify.
I have one right now, a client. Husband passed away from war service, overseas conflict service, and she inherited all of his eligibility.
Yes.
She can use his VA. She collects his Social Security and any disability.
Yeah.
So now, one catch: if you get remarried,
you lose it all, which is why you will not see me getting legally remarried. When I meet that guy that I want to spend the rest of my life with, we will stand in front of an old oak tree, Professor Undying Law.
Hold your hands.
But Patty Slaughter, you're not invited because you can make it official. Love you to death. Yeah, she's ordained. But there will be no legal piece of paper because the second I do, I lose all my military benefits as a 20/20/20 spouse. We'll get into that later.
Yeah, and just one other thing. Let's say you receive 100% disability rating from VA.
Yeah.
Your real estate taxes are waived. So instead of, let's say, $3,000 a month, or a year a month, $3,000 a year, you may only pay $250 a year.
If anything.
If anything.
Yeah.
So great loan, low rates, easy to get qualified, high ratios. Credit usually isn't an issue as well, as long as the banks will take it. So everybody, let's debunk one thing. Everybody says VA has no requirement for credit scoring.
Yeah, they kind of do.
Well, VA really doesn't. Like, if you read VA guidelines, they don't need a credit score.
Dang.
VA doesn't give you the money.
Right.
So the banks that VA insures and backs the loan, the banks give you the money. So you have to play by their rules as well.
Well, that is sort of like the other golden rule.
Yes.
Those with the gold makes the rules.
There you go. So just keep that in mind. But lot easier standards in qualifying.
So, but for most of the areas you and I work, there's another 100% financing option
For
if you don't qualify for VA.
Right. USDA.
Yes. That's the one that blew my mind.
Lots
when
of
I first learned
abbreviations. So let's first, United States Department of Agriculture.
Yes, the farming organization under the federal government will give you a mortgage.
You'll see USDA, you'll hear Farmers Home Loan, Farm Loan, 100% finance. I mean, you'll hear all kinds of things about this loan. And the other thing you're going to hear about it is it's a great product.
It's amazing.
First-time home buyers. It's probably the lowest rate we have on the market now on the rate sheet is for a USDA loan. Low mortgage insurance for not being a veteran.
Right. You just have to make under a certain amount.
So it is a little bit stricter when it comes to qualifying. They have income requirements, and it's based on the state, the county, everything else you're living in and buying in.
And how many people are in your house.
Or in your household, everything else. And they don't care if the kid is 18, we need to verify they're not working.
Yes.
It's crazy, but I mean, we do it. It's easy to do.
It's very easy.
Yep. Great rates, 100% financing if you're not a veteran. Now, you have to be in a rural area.
All of Calvert is, for the moment.
This can be looked up on a map, anything else.
It's like there's so many areas between Anne Arundel, Calvert, St. Mary's, and Charles that qualify.
Right.
I learned this part. I was blown away. This was several years ago. I had a client look at La Plata. I'm like, well, La Plata is not going to count. Lo and behold, it was one teeny tiny little neighborhood, because of the way it was laid out, that qualified.
In La Plata?
In La Plata.
Really?
Don't know if it still does. So, but we got to put in the address.
That's awesome. There's a website, and it's just like VA, figuring out if you qualify. You can call us.
Yeah.
I actually give the website to agents all the time. Like, you can run it if you want, or you can just call me.
No,
you literally just put in the address, and it comes up on a map and says eligible or not eligible.
Right. So I use that with my listings, too, to say whether or not it's eligible for USDA, if it's outside the norm.
And there are some where one side of the street is eligible,
The other
And the
side
other
is
side of the
not.
street is not eligible.
Right.
So sometimes you have to verify specifically, but
Yeah. Well, and that's why on my listings I put in the exact address, and it'll come up as green and go eligible,
Oh, it populates it for you.
or it comes up and says red. Sorry. It's like, I'm gonna see if I can not
Sell to a veteran.
Yeah. I'm like, here we go. But it's such an amazing program for my first time buyers
Yeah.
that they don't have the 20% down.
Right.
And
Right.
and if you, but there is one catch though that we need to mention: the debt to income ratio.
It is stricter when it comes to qualifying.
Yes.
So we're not going to go into debt to income ratio and all that now, calculating, but basically how much debt you have added to your mortgage payment divided by your gross monthly income gives you a percentage.
Which I think is smart because it's keeping these buyers in a area that they can truly afford it. And that they're not going, because one of the things I love about you is you don't tell someone, oh, you can afford this, when really their budget says they can't go above here.
Right.
We keep them in their budget.
And there's lots of factors for that. And there's lots of things to it. So that's why I don't want to get into, nope, this is if you're above this, you don't qualify. You can. It's case by case, your credit, how much reserves you have. There's actually two ratios. There's a housing ratio and a debt ratio.
Yeah.
What they are, and there's a lot of factors. So
just call him.
I know I'm talking to you about it.
Yeah. But at the end of the day, though, it does have a little bit of a cap that we just have to be a little bit more cautious on.
Right. Whereas VA doesn't care what you make.
No.
They don't care. So
I do.
That's the 200%.
Yeah.
that's the 200% options. We'll check. We've done those.
Yeah.
The last one, FHA.
Yes.
So honestly, I don't.
What does FHA stand for?
Oh boy, here we go. Federal Housing Administration.
So we've got all three of these, which is why they're government loans that are tied to government entities.
So everybody out there, we're going to be issuing a test later on the abbreviations of what they are. But so each one, there are three separate loans because they're backed by three different government entities. And when I say backed, they're insured.
Okay.
The way they insure them, they all do the same thing. They all charge an upfront fee, guarantee fee, whatever you want to call it, which you can finance. Okay. You can roll it into the loan. They then charge, well, VA doesn't, but they'll charge some type of mortgage insurance, whether it's an annual fee, whatever they want to call it.
Yes.
FHA charges one and USDA charges one. USDA is by far the cheapest.
It's teeny tiny.
Right. And then FHA is next.
Yes.
And varies based on how much money you put down. The difference with these is there's a lot of times that this mortgage insurance, like a conventional loan, which we have a whole nother discussion about, doesn't go away. The only way to get rid of it, a lot of times, is refinancing.
And depending on where the rates are, when you refinance it to get rid of it, you just basically jump from the frying pan into the fire.
Right.
Because you're not reducing your payment.
Right.
You just mentally got rid of something that's no longer tax deductible, according to what we've read. So the disclaimer is, please talk to your financial advisor. There, we got it out there.
So there is a lot of times when I get clients that call me, and brand new clients, first time home buyers, are like, I heard about that loan my parents told me I should do. It's a FHA. Do you know anything about that? I'm like, well, yes, it's a great loan. Let's look at all the factors first.
Yes.
FHA is a great loan. There's no income caps. There's no location restrictions.
Right.
They have a much more relaxed qualifying guidelines. In other words, higher debt ratios, lower credit scores.
Which, with a higher debt ratio, I'm okay with that. With, let's say, I've helped several clients where it's a couple.
Right.
One of them is working. The other one's about to graduate school, and they know they have a job coming up. Yep. So they know in 3 months that payment's not going to be painful.
Income's going up, right?
Yeah, or they're due for a big raise or something like that. I'm like, awesome. You were staying in your comfort zone.
So I have a perfect example. Okay. I'm going to try and make this as simple as possible and explain everything.
Yeah.
So smack me if I don't explain a term.
Can I smack it?
All right. So I have a client right now, real life. Qualified him for conventional.
Yes.
They were going to rent out their house, which is fine. You can rent your house.
Okay.
I don't have to count the payment. I can use it to offset on a conventional loan right away. They're having a tough time renting it out or getting it prepared and transition. So what I looked at today was switching them to an FHA.
Okay.
I tried to do conventional and count the payment against them, but my ratios were too high. I couldn't qualify them conventional.
Gotcha.
I tried to pay off a bunch of debts. I got the ratios down, but it didn't get to the point where I could get mortgage insurance or MI. So let's explain that. Anytime you don't put 20% down on a loan, you have to have mortgage insurance. When you don't do a government loan, you do a conventional, Fannie, Freddie.
Yeah.
Talk about later. Tune in. You have to have private mortgage insurance, which is not through government. It's through private companies who insure the loan for the banks.
But you don't go out shopping for it.
I actually provide them 3 or 4 quotes and will give them options. They don't. Yeah. I do.
Yeah. But the buyer's not on the phone with State Farm, Allstate.
We do it for them. It's nice and easy.
Yeah.
But it's a requirement. Well, unless your debt ratio is below a 50 back ratio, meaning 50% of your gross income, mortgage insurance won't. You can't touch it.
Yeah.
Or even if you go just below it, it's super expensive. So I couldn't get there.
Okay.
I pulled up an FHA loan. Was able to get an approval at a much higher ratio.
Wow.
Putting the same amount down. I actually was able to get them the same rate.
Dang.
And payment ended up being $100 more.
So they get to go.
And they don't have to. Now I'm counting the payment against them. They don't have to rent their house. They don't have to sell it. They can transition, move, buy the new house.
And then deal with what they want to do.
Clean it out, take their time, prep it, sell it, rent it, whatever they want to do. It's an option. So that's, and their credit scores, normally I would never look at an FHA. It was a 780 credit score. I'm like, hey, you don't go FHA. It's much more expensive.
But for $100 more, they have the peace of mind of doing it the way they're comfortable with doing it. And I will say this, one of the most stressful times of my life was knowing I had my house under contract and I was not under contract on something to buy.
Yeah.
And I'm sitting there thinking, where am I going to move with all this stuff and 2 cats?
And then you think, well, I don't want to settle. You want to buy something nice.
It ended up just being 1 cat at that point. Hey, look, Eleni was 17. Misha made it to 17. We got no judgment here.
Oh, I thought maybe it was like the kids. One of the cats had to stay with the new buyers. And
well, I wouldn't have been opposed.
Right.
My kids would
put it outside. If it shows up, feed it. Yeah.
My kids would have never spoken to me forever, but no, they were like my babies. I kept them.
But you had to move forward, qualifying.
But that's a whole nother topic when you're self-employed.
That's a great. We're going to talk about that later.
Yeah. Yeah.
Tune in. Episode.
That might be 6, one that 7. Requires tequila.
It's a longer one.
It's going to be flashbacks.
Yeah.
Yeah. That was a rough process. But again, so if this, I empathize with this buyer because again, that process where you have to find something to buy because you're already under contract. There is nothing in this world more stressful than that.
Right.
It's like, where am I going to live? What am I going to do?
Right.
And Brent was coming home for the summer, so I'm like, I got an extra kid too, so I can't go to a 1-bedroom apartment for a little bit. No, it was, I aged 10 years during that process. So.
And it has its purposes. It is a great loan. Well, it is something that a lot of times I'll do a side-by-side. Here's a conventional. Here's FHA. I actually had a bar the other day. I did conventional, USDA, and FHA.
Wow. So, but at the end of the day, these are tools.
They are.
Which tool?
In my little toolbox.
In your little tool. You like the, what was it?
Builder Bob.
Tim Allen? Home Improvement?
That's right.
So, for the end of the day, you help them figure out which tool is best to use. And nobody should be scared off by the label of a loan. just look at what it costs you each month.
Yep. I agree.
Yeah.
And that's why we always show options instead of saying, here's your loan.
Yeah.
Even if they don't qualify or I don't think it's a great option, it's not my decision.
No, it's not your
I
money.
need to show it to them. And here you go. Here's what you can do. I think that was a great little synopsis of government loans. It was quite a bit to take in. So, I mean, let us know. Message us. Tell us if you have any questions. There's a lot of info. I know VA, tune in, I think weekly or bi-weekly. We're going to be doing a VA.
We're going to be hitting on that a lot.
You're going to see a lot of those. So just because we see so much in your background. But if you have any questions on government loans, let us know. Tune in for the next episode, which we're going to talk about conventional financing.
Yes.
So a lot to that.
And you don't know what kind of stupid things I'm going to do trying to sit here in this chair.
Yeah, she could break it.
Again.
You guys have a great week, and we'll talk to you soon.